Hi everyone, I am reviewing the E-mini future market on the 16th April 2026. Let's look at the weekly RTH in the way that we can see that the weekly RTH there's three bar bull bar, so in the way that market generally still in bull. Now look at the daily RTH, like yesterday that there's a sharp V up recovery from the Iran war news, and then yesterday, although the three bull bar is in decreasing size, but yesterday the price action has actually crossed the prior all-time high at 7080.75 and retraced back a little bit. So today, likely the price action is going to be a trading range without too much because we are expecting sellers probably above the level trading range to down. So this is for the context of higher time frame. This is likely. However, you will not go very further down as this is a very tight bull trend, and we will not expect a bear to gain strength, gain momentum so quickly. So likely it's going to be a trading range day. All right, so now let's look at the bar by bar analysis. So you can see that this is the yesterday's price action chart, and it's been bull trend all over, except that around the midnight there's a bit of retracement below the 20 EMA, and the last 2 hours of the market, it has been bull buying all the way until the close. And this at bar 55, this it's a big bull bar, and this level will definitely act as a support. And we can also use this to see that what is the if today's open a gap up uh, and reverse down, we can actually use this bar to see a bigger trading range. What is the pullback level? All right, so that's the okay. Today opened the gap up and the open with a big doji, so likely it's going to be a trading range day. At bar two, it's a bear bar, close trying to test the low of bar one, but unsuccessful. And bar 3 trying to reach for the close of yesterday at bar 72. However, it did not close, and there's a buyer around the high of the bar to bring the price back to the range of the bar 1. So in a way, from now we are still considered a trading range price action. Okay, bar 4 itself, it's an inside bar. It forms an II. So when II forming, we can expect to have a breakout soon. But then the question is, looking at the price action, is it going to break down up, or break down below? Looking at the price action, I think more likely it's going to break down below because there's a very huge magnet here. The close of the yesterday, and also the high of this bar create a support, right? So likely it's going to be a breakdown. So here I did not place a trade because I was hesitant that it's going to be just a small trading range. However, bar 5, it's a surprise bar by the bear, right? You break down the II pattern and also break down the bar 3 low, but surprisingly it reaches the close of yesterday and then reach the support level of here. And then by now, market likely is going to be always in short or trading range, but definitely not in low. So the bar itself, has the range is 18, close to 19 points. So it's a huge bar. I almost very tempted to sell below bar 5 for continuation down. However, I think it's smart to wait for a little bit because this is just at the resistance level, the support level, and it's best to wait for a follow through bar to confirm that market is always in short. So I did not I placed the trade and quickly cancel my order, and I want to wait for the follow through bear bar. All right, so there's no follow through bar and it's a big bull bar trying to get back to the trading range. So luckily I did not place the trade over here. But then bear shows their attempt to want to break below, but then bull shows up again because this is a very important support level here. And this is a big doji, that means trading range. And bull trying to get above the EMA, but not successful. So here it's a trading range. I wouldn't want to go long just yet, although it's a reasonable place to wait for the entry bar and place a stop loss here to go long back to the bar 1 high. But I'm still waiting. Bar 9 is a big doji, and it shows that there's a seller around this level, this support level at bar 3. And then by now the bear shows continuation trend. Here I make a mistake in the way that yes, bear shows a very shows strength of want to bring the price action down, but same thing here that this is an important support level. And this is a second push by the bear. So in a way that the probability is a lot higher for the bear compared to bar 5. And here it can create a very good stop loss level as well. So I place a trade here under bar 10. I place a short here and aiming for down to this level, right? But this is a mistake because I should have wait for a follow through bar, a bear bar that breaks below the this support line or even below bar 6. I was too impatient, so I placed a trade and the order failed. But it is a bull doji. It is a bull doji, so that means the bear could not get a follow through bar. Another bull doji. By now, market is still clearly in trading range, so it is very. I should be looking to get out of this trade, right? I should be, but I did not. I was thinking that my stop loss is here, maybe trading range is here, and reverse down further. However, that I forgot that this is an important support level, and that if a bull wants to enter here and get back to the height of bar 1, the risk is very small. The risk is very small for the bull. So in the way that risk to reward ratio is very good for the bull trader's equation. So likely that many bulls will want to enter and want to get long here. Again, this is a 3 bear bar. By now, I should be trying to get out of the trade, but I didn't. Okay, hesitation by the bull, probably because this is a EMA line. And now, bull is breaking above the EMA, very clearly that this is going to be always in long, a trading range to always in long. And I still didn't get out of this trade. I should be getting out of this trade by now. And bull managed to get to the yesterday high. If they get manage to get to yesterday high, very likely it's going to run my stop loss here. And it did. It went all the way to my stop loss to the tick and then back. Yeah, because I think many bears will place their stop loss here and then buy back. So that's why the market reverses back here and then go further up to big bull bar, almost reaching the height of the opening. And this is a big 3 bull bar in the way that now market is clearly in long, right? So in a way, there's a very similar price action as last few days. Sell off first, and then the bull just keep going. And this is trend from the open, it just keep going. Sell off first, and then trend to keep going. Right. So I thought that by now, no. By now, I do not want to waste opportunities. So I place the long here, okay. But then I realized that no, this is all-time high level here, so the risk to reward ratio is not good for me. If I place here, my stop loss is probably at best here or here, but then my reward ratio is probably here or here. Okay, this is the measure move target if you look at the 1 hour higher time frame trading chart. So even though probably it's going to go a bit higher, but the risk to reward is not right. So I exit at the same tick. So I break even at this trade. And indeed, market touched all-time high and come back. But then even that, the bull still wants to go even higher. By now, I do not dare to go long anymore, as this is a very important resistance level. And also we can see that market has been trying to go 1, 2, 3, or we can do 1, 2, and 3, right? So this is a wedge top and a minor reversal likely. So if you're a bull have gotten long here, bar 24 is a very good target, a very good bar for you to exit long. But then here, bar 25, continuation, find the support at the high of the bar 5, which is an important mother bar. And then market went to take profit, went to reach exactly the 60 minute trading chart to our measure move target at the tick. Okay, so we know that this will be a very important resistance level, a profit taking level. And from now, maybe I wouldn't want to get long at all. And bull trying to reach again, break the important level, and then now around here. This is a very good signal bar for the bear, because you can see this is what we consider a failed breakout from the the measure move. So bull trying to break out, but it did not show strength, and then you break down below the target, and this is a very good follow through bar, and this is a II inside bar that a breakdown below is very likely. So in a way, if you want to short, you can short around here and then the stop loss here. But then the target is likely just going to be here, this region, because this is a very good bull micro channel. So it will not reverse down too drastically. Next, surprisingly, bear able to reverse down all the way here rather than here. So in the market, but take note that this is a very big, there's a big tail here, a wick here. That means it's a trading range, bar. So in a way, the market sentiment is likely a trading range to bear. Inside bar by the bull, but then followed by an outside bar, a trading range bear, doji bear. And then bar 41 that the bear able to take down the low of bar 38 and close to the low of bar 38. So likely bull will get a second move further down, a little bit further down. Good follow through bar as well. Follow through bar, and then it broke below the low of 37. But this is a bull reversal bar, but even the reversal might be just minor. And so in a way, this shows that this is instead of reversal bar, this is where the bear trying to take profit and scale out and maybe enter even more here. Okay, so this likely is going to be a reversal bar, and this is the entry bar. So in the way that if you want to long here, it's possible to long here, but then probably just a one-to-one targets here. Stalling, and this is where about the one-to-one targets. Oh, not yet. So, but if we take a look at the here. Yep, so reach here. And bears break down even the EMA. So I suspect that for the next 1 hour or two is going to be trading range like this. And bears break down further. And the price action has shows that bears able to maintain price action below the EMA. Okay, so this is a price action for the rest of the evening. It's a trading range action. Okay, so in the way that I did my own trade review, I shorted here, which is a very impulsive short. I should wait for a follow through bar breaking below the important support level, and this is mistake number 1. Mistake number 2 is after seeing this number 3 bars here, I should really thinking about how I can get out of my trades over here, right? So in a way that even at bar 15, it still gives me another chance to exit my long trade, my short trade, but I did not. I let it run all the way to stop on my stop loss here, right? So that's mistake number 2. And my next trade is here. In a way that if I place this trade, if the context is maybe a few days ago, let's say on Monday or Tuesday, maybe this trade would make sense. That market was just going further. But today we are reaching the all-time high target, which is a very strong resistance level, even though very likely that probability is that the market will go further up, but my risk is too big. So my trader's equation does not work. I shouldn't have placed the trade here. If I see that, right, so the risk reward doesn't make sense. So I shouldn't have placed trade at all here. That's mistake number 3, right? So what I could have done better is that first, be patient. Don't rush into trade. Gain clarity first, and also be flexible. Always just follow the trend. If I see that this 3 bull bar, even though it's a very humble bull bar, it's a signal that the bear is trying to gain control, and the risk to reward the trader's equation makes sense for me to get long. So in a way that I could have quickly exit around here or here, and then get in long around here or even here and ride the bull trend here. So that is what I could have done, right? Interestingly, that if we look at the bigger trading range, if you look at this as a whole trading range, that take this for example to the bar 1 high, right? That there is a bull trend all the way here. Sorry, bar 42 here. That right, the bull trend here, and the retracement is exactly at 50%, right? And when trying to retrace back, it's exactly at the 21%. This is the Rose Fibonacci level. So this is one observation that we can use here, say it's a range to determine, to look at the tracement back. And many times the retracements out of the open is usually at 50%. All right, that's it for today's trade review. Yeah, thank you very much.